$44.8 billion for Unilever's food business? Just think about the sheer volume of mayonnaise McCormick is trying to corner here.
It's a rumor, Nate. You're building a monopoly out of whispers. Biopharma actually dropped $46.8 billion in cash this quarter. 19 signed deals.
Okay, Gilead spending $8 billion on Arcellx is real money. But a global condiment empire, that's romance.
It's an antitrust nightmare. Let's dissect this Biopharma binge before we hit the grocery aisle. The rundown.
Which is why nobody should be shocked that Legrand is buying Keydak and TS.
Right, a Chinese rack manufacturer and a European power specialist. It is a pure data center infrastructure play. The AI arms race is literally just a real estate and power grid race disguised as software.
Exactly. You want to win the AI war? Buy the guys who make the server racks and the cooling systems. It is the picks and shovels trade of the 2020s.
Speaking of expensive real estate, Rip City Rising just grabbed a majority stake in the Portland Trail Blazers.
Finally, the NBA ownership landscape has been waiting for this shoe to drop for months.
I looked at the financing structure on this one. It is aggressive. Like, really aggressive.
It is a sports team, Maya. You don't buy an NBA franchise for the rational cash flow. You buy it for the ego and the media rights upside.
I know, but when private equity firms are increasingly targeting public companies for take-privates just to escape scrutiny, it makes me wonder why sports valuations get a total free pass on basic math.
Because you can't buy courtside seats to a take-private software deal.
Fair point. Moving to the boring but profitable category, Duke Energy officially handed off its Tennessee Piedmont Natural Gas business to Spire.
A classic utility-shedding non-core assets. Love to see it. Just clean up the balance sheet and move on.
And Sun Life is grabbing Bell Partners to expand their multifamily real estate portfolio.
Now that one I hate.
Wait, really? Why? Sun Life expanding their real estate footprint makes total sense right now.
Have you looked at multifamily cap rates lately? They are catching a falling knife. Improved financing conditions or not, Bell is sitting on vintage assets that need serious capital.
I completely disagree. If you read the Bell Partners portfolio breakdown, they actually offloaded a ton of their older Class B stuff last year. Sun Life is buying stabilized Class A properties at a massive discount. They basically timed the bottom perfectly.
Spoken like a true believer, I guess we will see who is right when the Q3 write-downs happen.
We will put a pin in that, but if you want to talk about wild valuations, we need to talk about McCormick.
Oh, the whispers. McCormick stock taking a beating despite a killer Q1, all because somebody leaked a $44.8 billion rumor.
A rumor that they are buying Unilever's food business, which, if true, would mean dealing with insane regulatory scrutiny until mid-2027.
We're going to tear apart that $44 billion spice rack in a minute, right after we break down the $46.8 billion Biopharma just spent in 3 months. The big one. 19 deals in 3 months is not a strategy. It is a spree.
$46.8 billion, Nate. That is the Q1 Biopharma tab, and we are barely into spring.
Exactly. Gilead drops nearly $8 billion on Arcellx. Eli Lilly writes a $6.3 billion check for Centessa. It feels like these heavyweights are just walking down the cell therapy aisle, throwing everything into the cart.
I read the Arcellx filings. Gilead is paying a massive premium for a pipeline that still has to clear phase 3 hurdles. It is textbook panic buying. They see the patent cliffs coming, and they are absolutely terrified.
I completely disagree. It is not panic. It is a calculated land grab. You have improved financing conditions right now. Money is moving again. If you are Eli Lilly and you want specialized disease treatments, you buy Centessa now before someone else does.
Calculated? Nate, look at the multiples. They are pricing these clinical stage assets like they are already generating blockbuster revenue.
Because in this market, pipeline is everything. If you wait for the phase 3 data to drop, the price doubles. You know exactly what the pitch is. You tell your client to buy the asset today.
Oh, the classic banker pitch. Buy it now, or the boogeyman gets it. I am just saying, when 19 different deals close in 1 quarter, somebody is buying a lemon. You cannot tell me all $46 billion of this was smart money.
Sure, but if one of those cell therapies hits, it pays for the other 18 mistakes. That is the whole biopharma model.
Wait, are you actually defending an $8 billion bet on an unapproved asset?
I am defending the necessity of the bet. It is like grocery shopping on an empty stomach. Yes, you buy way too many snacks, but at least you will not starve next week.
You are comparing a highly complex oncological cell therapy acquisition to buying a family-sized bag of Doritos.
I am a man of the people, Maya. I make the complex accessible.
Right. Well, the analysts are blaming the whole tech and healthcare rebound on the AI arms race and cheaper debt, but I think it is simpler. Big Pharma has too much cash and not enough internal R&D.
They are definitely feeling the heat, especially when you see private equity firms increasingly targeting public companies for take-private deals. The public markets are ruthless right now.
Which is exactly why you do not overpay for a clinical stage pipeline. The scrutiny is brutal.
Fair enough. Though speaking of brutal scrutiny and shopping for actual groceries, we need to talk about this McCormick rumor.
Oh, the Unilever whisper.
$44.8 billion for Unilever's food business.
McCormick actually had a really strong Q1, but their stock took a hit anyway because investors are terrified of this rumor.
As they should be. A $45 billion food tie-up? If they actually try to push this through by mid-2027, the antitrust regulators are going to have an absolute field day. Voices. So I'm reading this note from the analysts this morning, and they're pushing this narrative that the AI arms race is the primary catalyst driving the mega deal rebound in tech and healthcare.
Tech, absolutely. Healthcare? No, they're conflating two entirely different trends to make a neat little thesis.
You don't think AI is pushing pharma deals?
I know it's not. Look at the data. Biopharma just racked up $46.8 billion across 19 deals in Q1. That isn't an AI arms race. That's pure pipeline panic.
Okay, fair. Gilead dropping nearly $8 billion on Arcellx is all about cell therapy, not chatbots.
Exactly. Same with Eli Lilly buying Centessa for $6.3 billion. They're buying tangible specialized disease assets because their patents are ticking down. If I read one more note slapping the AI label on a basic drug pipeline buyout, I'm going to lose my mind.
The bankers need a story, Maya. You know how much we love a buzzword.
You used to put blockchain in every pitch deck in 2018, didn't you?
I will neither confirm nor deny. But speaking of wild narratives, what are you hearing about McCormick?
The Unilever food rumor, $44.8 billion. I'm looking at McCormick's stock and it took a hit today, which makes 0 sense because they just had a really strong Q1.
The market hates uncertainty. But think about it. Unilever merging their food business with McCormick? It completely reshapes the grocery aisle. They're really trying to spice up their portfolio.
Please tell me you didn't just use a spice pun for McCormick.
I couldn't resist, but seriously, the whisper number is a mid-2027 close.
Mid-2027? Good luck. Regulators are going to tear a grocery tie-up of that size to shreds. Cross-border M&A is already facing massive geopolitical headwinds this year.
Which is exactly what we'll be tracking tomorrow. We need to see if we get actual official filings on this Unilever behemoth, or if it's just bankers floating trial balloons to see who shoots. Spill the tea. I can't stop thinking about the absolute chaos happening over at McCormick right now.
You mean the stock taking a beating after a perfectly good Q1?
Exactly, because nobody cares about a solid earnings beat when the rumor mill is churning out a $44.8 billion tie-up with Unilever's food business.
Nate, come on. $44.8 billion. For mayonnaise and spices. That's a mid-level banker's late-night fever dream. It isn't real.
Oh, I'm fully leaning into the dream. Think about the shelf space dominance. Hellmann's and Old Bay living in perfect harmony. You could corner the market on every single summer cookout in America.
The FTC would have an actual heart attack. You're talking about a mid-2027 close just to survive the regulatory gauntlet. Do you really see regulators looking at that much grocery aisle concentration and waving it through?
I actually do. Because spices and condiments aren't semiconductors, Maya. They aren't critical national infrastructure. It's potato salad.
It's pricing power. The leverage they'd have over regional supermarket chains is insane. I was digging through Unilever's historical margins last night. Their food division is massive but totally bloated. McCormick buying them out? The debt load required to pull that off would be staggering.
That's exactly why I love it. It's audacious. Plus, financing conditions are improving. You know, some hungry syndicate desk is running the math right now.
Running the math in Excel and actually signing a term sheet are two very different things. I'll believe it when I see an actual SEC filing.
Spoken like a true skeptic, we'll definitely be refreshing the filings tomorrow to see if this behemoth actually materializes.
Assuming geopolitical volatility doesn't kill the cross-border momentum first, which is exactly what we need to look at next. Tomorrow's radar.
I am telling you, keep your eyes glued to the SEC feed tomorrow at 6 a.m.
For the McCormick and Unilever rumor, please tell me you are not buying this $44.8 billion fantasy.
The whispers are deafening, Maya. Unilever merging its food business with McCormick makes perfect sense. Put the mayo and the mustard under one giant roof.
Nate, McCormick is spices.
Same grocery aisle, synergy.
You sound exactly like a desperate associate pushing a pitch deck. Have you looked at the cross-border regulatory environment? A $44 billion food behemoth? The antitrust lawyers would feast on this.
They can try.
Plus, McCormick just took a stock hit despite a great first quarter. The market clearly hates the idea.
The market just lacks vision. When that press release hits tomorrow, I am taking a victory lap.
I will believe it when I read the footnotes. See you tomorrow, Nate.